There are rules that every funded trader knows. You have heard them. You have probably written them down at some point, and then you have broken every single one of them the moment the pressure got real. This video is about 5 of these rules, not generic advice you have heard 100 times. 5 specific rules that I follow on every funded account I trade, and 5 rules that I have broken myself, sometimes repeatedly. I broke them before I understood what breaking them actually will cost me. Because knowing a rule is not the same as following, and the gap between those two things is where most funded accounts really die. So let me get into it. Rule number 1. Never move your stop loss once it is placed. This one sounds so simple that it barely feels like a rule. Of course, you do not move your stop loss, right? Everyone knows that. And yet, I would bet that almost every trader watching this has moved a stop loss in the last 30 days. Not because they wanted to break the rule, because in the moment it felt completely reasonable. I've also done that in the past 30 days. I'm not proud of it. So here is how it actually goes. You place a trade, you set your stop loss, the trade moves against you a little. And then you look at the chart and you think the setup is still valid. Price has not actually broken your structure. This is just some noise in the markets. So let me just give it a little bit more room. So what happens? You move the stop loss. And sometimes, that works. Price comes back, the trade plays out. And your brain files that away as evidence that moving stops is sometimes the right call. But what your brain does not file away are the times you move the stop loss and the trade continued against you, and now you are sitting on a loss 3 times bigger than you planned for, because that happens too, and it happens more often than the times it works. The stop loss is not just a suggestion. It is a contract you made with yourself before the trade about how wrong you are willing to be. Moving it after the fact means you are renegotiating that contract under emotional pressure, and you will always give yourself worse terms when you are emotional than when you were calm. Place the stop loss, leave it there every single time. Now here we go with rule number 2. Stop trading after 2 losses. No exceptions. I have talked about this in other videos, but it belongs here because it is the rule I see broken most consistently, even by traders who know exactly why it matters. The reason most traders break this rule is that it feels like giving up. You have had 2 bad trades, right? The session is still going. There are setups being formed. Walking away feels like you are letting the market win. But here is the thing. 2 losses is not a signal that you are a bad trader. It is a signal that today is just not your day, that the market is not aligned with what you are looking for, that you are not seeing it clearly right now. And the worst time to take a 3rd trade is when you are in that state. Not because your strategy is broken, because your judgment is compromised. The need to recover affects every decision you make after it shows up. You will take setups you will never take in a fresh morning. You will hold losers longer than you should. You will cut winners short because you need the win to actually feel real. I have blown accounts that I should have kept by breaking this rule. Not by trading badly on the first 2 losses, by trading emotionally on the 3rd, 4th and even 5th trade. The first 2 losses were small and manageable. What came after them was really not. 2 losses. Close your 2 losses. Close your trading platform and see you tomorrow. Rule number 3. Never size up after a good run. This is the sneaky one, because sizing up after a winning period does not feel like a rule break. It feels like you're building confidence. It feels like you have earned the right to go bigger. The strategy is working. You are reading the market well. Why would you not press your advantage? Here is exactly why. Because confidence and edge are not the same thing. Your strategy does not get better because you had a good week. The market does not become more predictable because your last 5 trades were winners. What changes when you are on a good run is your emotional state, not your actual edge. And the problem with sizing up emotionally is that when it goes wrong, and it will go wrong eventually because every strategy has losing periods, the loss hits you at maximum size. The very moment your winning streak ends is the moment you have the most on the line. I have done this, trust me. I had a strong week on a fund account. I got a payout. I was trading well. I felt sharp and I sized up. And then I had 2 bad days back to back at bigger size, and I gave back almost everything I had made in the last week. And then some more after that. The sizing I used on day 1 of a good week should be the same sizing I use on day 5. The process does not change because results are going well. The moment you tie your sizing to your emotional state, you have lost control of the most important variable in your trading. Rule number 4. Treat every day like day 1. No carrying emotion forward. This one is harder than it sounds because it goes against something very natural in human beings. We carry context. If yesterday was great, we feel confident today. If yesterday was terrible, we come in today already behind. And both of those states are very dangerous. The trader who had a great yesterday comes in today with slightly less patience, slightly less selectivity, because the caution of yesterday makes today feel more forgiving. They take a trade that they would not normally take because they can afford to lose a little. The trader who had a terrible yesterday comes in today needing to make it back. They see setups through the lens of what they need to happen rather than what is actually there, and they force things. The fund account does not care what happened yesterday. The market does not care what happened yesterday. Every session starts fresh. Your equity might be up or down from where we were yesterday, but your process for today should be identical to what it was on the first day you opened that account. I have a very specific thing that I do before every session. Before I look at the chart, before I check the news, I write down my rules for the day. Same rules every single day, same process. It is boring, it is also what keeps me from carrying yesterday into today and letting it affect decisions that belong only to the current session. Day 1 mindset every single day. Rule 5. Walk away when the market is not giving clean setups. This is the rule that feels most like a skill gap because you break, because the temptation to force a trade does not come from a desire to break rules. It comes from sitting at the charts for 2 hours and seeing absolutely nothing you want to trade and feeling like you are wasting your time. But here is what most traders do not understand. Sitting at the charts and not trading is not passive. It is one of the most active decisions you can make, because the alternative, taking a trade that does not fully meet your criteria just because you need something to happen, is far more costly than a day where you close the platform with no trades taken. I have had sessions where nothing set up for 3 hours and then a perfect trade appeared in the last 30 minutes of my window and paid for everything. And I have had sessions where nothing set up and I forced something in hour 2 and it cost me the account. Not because the market was unfair, because I could not tolerate inactivity. Inactivity tolerance is a skill. It does not feel like one because it requires you to do nothing rather than something. But the traders who figure this out, who can see through a quiet session without forcing trades, those are the traders who keep funded accounts. If the market is not giving you what you look for, you are not missing an opportunity. There is no opportunity. The opportunity is protecting your account for the day when the setups are perfect and you execute cleanly. Walk away and just come back tomorrow. These are the 5 rules. Stop loss stays where you put it. 2 losses and the session is over. Sizing does not change because results are going well. Every day starts fresh. And if the market is not giving you clean setups, you walk away. Every one of these rules sounds very obvious when you read it here. Every one of them is genuinely difficult to follow the moment real money is on the line and your emotional state is pushing you in the other direction. And that is the whole point. The rules are not hard because they are complicated. They are hard because following them requires you to consistently choose your process over your feelings. In the moment, under pressure, every single session. The traders who keep fund accounts for months are not the ones with the best strategies. They are the ones who have built enough discipline to follow simple rules consistently even when they do not want to. That is the real edge in the markets. Not the setup, not the trading strategy, not the entry, doesn't matter. The discipline to follow the rules you already know. If you want to build that level of discipline with real structure and accountability behind it, I have a mentorship called the Platform Blueprint. Link is in the description if you want to apply for that. It's completely free to apply. And if you are looking for a prop firm, I strongly recommend Hola Prime. They have the fastest payouts in the industry, under an hour with the 0 payout denial policy. You can use code NFX for 30% off. The link is in the description as well. Thank you guys for watching and I hope this was valuable to you. See you in the next one.